What is going on, Bulls and Bears? Welcome. This is Sunday, a late night video. I do these from time to time, so you may be watching this on Monday. Either way, the news is going to be up to date and accurate. And I'm not going to sugarcoat anything. We're going to tell you exactly what to expect and where we're headed in this economy, the cost of living, and more. Let's get into it. Please make sure you like this video to help us on the algorithm to help this channel stay alive. For some reason, this channel grew to 75,000 subscribers in just a couple years, and now we've been stagnant for almost a year. And the information is actually much more accurate than it was back then. So could it be that something or somebody doesn't want this point of view, my point of view, to get out to more people? It could be. Either way, please make sure you are subscribed and like to help us stay alive, because it certainly hasn't been easy getting the message out. The message that we try to bring you anyway. What we try to do is explain not just what's happened. Anybody can sit there and they can tell you, okay, the stock market did this, the stock market did that. What caused it? That's what we try to find out. What caused it? And knowing how this system, how this machine of debt and bull markets, bust markets, bull and boom, bulls and bears, knowing how all that works is going to help us down the road. What I've been doing is stacking cash as much as possible, because I do feel that deflation ultimately is headed our way. Now, over the past few years, many people have called me a perma bull. They said I predicted that prices could never ever come down, that home prices would go up to infinity and beyond, like Buzz Lightyear. No, I never said forever, but over the past 3.5 years, you have to say we've been pretty accurate about where things are headed. Just because I say prices are going to go up doesn't mean I'm predicting that forever. I don't have that big of a crystal ball, and especially with the way this economy is being moved and manipulated, things can change on a dime, right? Look what happened in 2020. Who would have predicted in 2019 that in 2020 we would have had lockdowns, shutdowns, 7 million people on foreclosure moratoriums? Probably 0 out of a million people would have said that that was even possible if you would have asked that many people in 2019. Here we are. We lived through that. We're talking about more health crises that are coming out. That's what they're reporting on anyways. So everything's on the table. Anything could happen, but I'm going to tell you based on what we can see, what we know as of today, where things are headed. And we're headed for more weakness in the markets. Yes, the stock market, you may see some bear market rallies, or what's called bear traps, where people think the market's going to recover, that it's hit the bottom, and then boom, another leg down hits, and it suckers a lot of people into the markets. The housing market, we're still going to see more weakness in the housing market. If you go back 1, 2, 3 years, we told you that there's going to be inflation, but I didn't say to infinity. I didn't say forever. If they would have kept rates low and not changed anything, then we would have seen home prices continue to go higher, but that's not what happened. Rates are higher. Mortgage rates are about double what they were just a couple years ago. When things change, our outlook's going to change. And we're talking about more rising rates here because another rate hike is in the cards. Let's go ahead and take a look at some news here. And even here in San Diego, which has been one of the hotter markets in the whole country, is starting to see some pretty big price drops. In fact, if you go back just a few reports ago where we talked about San Diego home prices starting to fall, asking prices are being slashed only after a couple days of homes being on the market, and not by a little, by a lot. So when somebody cuts prices that big, when a real estate listing agent cuts the price by $30,000, $40,000, $50,000 after 2 days, that tells you that there's empty open houses. Recent article, the Fed to inflict more pain on economy as it readies for another big rate hike. So I'm glad to see that that the decision makers are still raising rates. Remember, if they drop rates, what happens? The bubbles get bigger. Stagnation in these prices continues to, stagnation ends. Prices continue to go higher, completely manipulated. And it's just wild and mind-boggling to think about how prices were allowed to get to this point. The housing market, the stock market, so overvalued compared to PE ratios. We've never seen anything quite like this. Bubbles everywhere you look. The entire economy, it's the everything bubble. Many economists have coined that to this current economic phase that we're in right now, is the everything bubble. It's absolutely insane what they allowed to happen. And will they surprise us even more with what's headed down the road? Well, last month, CPI, another increase. So prices continuing to rise even higher than they were. We were already at a 40-year high. Last month's number came out, and that's the official number. Remember, the real number is about double that. And if you go over to Shadow Stats, they'll tell you the real number, the way it was calculated about 30 years ago before they changed the formula and how they calculate the consumer price index. If they just looked at everything that most people have to buy, then it would be about double that. And that's just the way it is. I think most of you would agree that prices went up more than just 9%. I've read people down in comments here on this channel that said their rent went up 20, 25%. 30% in just a matter of a couple years. This article gives us a nice chart here. We see in the blue that is services excluding food and energy, and that is a very big pain spot for a lot of consumers. Then of course we have energy in the green. All you have to do is go to the gas pump, and things are not easy to handle right now. We see the savings rate plunge, the money that people have left over at the end of the month after all of their necessities are paid is continuing to drop. And that's not just money that people have in their savings and checking accounts. That actually factors in incomes, because some people were coming to the conclusion that people are just pulling their money out of the bank because of the distrust in the banking system, that's why the savings rate is dropping so much. Well, it's not just that. It's actually looking at incomes versus expenses. And regardless of if the money's in a checking savings account or sitting at home under a mattress, it is dropping, and we're over a 12-year low right now. In fact, we're approaching financial crisis levels. Combine that with the record levels of debt that consumers are in right now. Remember, 7 out of 10 people are in the most debt today that they've ever been in their entire life. Yet we're told that we're in some sort of amazing economic recovery, that we're recovering from the downturn that we saw in 2020. That was all because of the health crisis. That was the completely only reason they're saying for the downturn that we saw. There was no problem with debt. Well, if it was just that, then why were people begging for rental assistance just after 1 month of not working? Just after 1 month, millions of people begging for rental assistance. Just within a couple months, millions of people needed foreclosure prevention because they were going to lose their homes. So it only takes a couple missed paychecks, and we saw that, and we witnessed that a couple years ago. And in fact, are we better now than we were back then? No, we're worse. Debt has gotten a lot worse. Savings rates even lower than it was pre-pandemic. So we're much worse off today than we were back then. Imagine if there's another crisis, another shutdown, and what's going to happen? Is it going to be more rescue programs to infinity to prevent the markets from crashing, to prevent home prices from dropping? Well, we'll have to see. And it's pretty split. Some people out there saying that's definitely going to happen, that they have no other choice. Other people are saying, no, everything's going to crash. Home prices are going to go down by 40, 50, 60, 70% and beyond. And I've never seen such a split view on what's going to happen. And when you have so much intervention, so much manipulation in the markets, it's impossible to tell what's going to happen. That's why I say try to prepare for both scenarios. Have cash in case we see buying opportunities come down the road, but also have investments that you think are going to go up if these bubbles are re-inflated. In fact, if I didn't live in California, there are some parts of the country where I would invest in real estate right now. But certainly not today in San Diego at these prices. But just because I say that I wouldn't do it doesn't mean that you're not in an area where it doesn't make sense. You might be in Oklahoma where home prices are very affordable still. Of course, the word affordable is subjective. It may be affordable to some people, but it's one of the most affordable places in the country. It's also some of the lowest rents. So you got to figure out what you're going to do. Everybody's different. Not everyone's in the same area. Not everyone has the same exact financial situation. So this is just the way I do it here. I try to be balanced, try to get ready for more inflation because they can reverse this. Rescue programs could be popped out anytime there's a next crisis that comes up. And that's why I say prepare for more inflation. But right now, what we can see right now, as far ahead as we can see with another rate hike on the table, is more weakness and more declines in the markets. So I continue to be a bear right now. That could change on a dime, but that's where I'm at right now. Home prices also are going to see more weakness. Please see my report just from a few reports ago. And San Diego is seeing some big price drops as far as listing prices. And we're going to see how that's going to translate into sales prices in just a couple more months. Please stay to this channel. Please set your alerts. What's that called? The notification bell. I never talk about that. I talk about it so little, I forgot what it's called. Please hit that notification bell if you're subscribed so you get alerted to the new videos, and come here for more updates. Hope everybody's doing well. Keep stacking. Stay safe. Bye for now. Peace.